This is the third of our Pathways Off the Plateau webinars that we're having with service providers in the local tech ecosystem that could be useful to you in your growth journeys. And we're joined today by Martin Dean, who's Director of Corporate Finance at Gravitate Accounting. And Martin's going to take us through some of the fundamentals of financial modeling and show us some of the tools that he uses with his clients to help do that. So, Martin, welcome. I'll pass over to you.
Yeah, perfect. Well, thanks everyone. Good to meet everybody. So yeah, I think the purpose of me being on this sort of webinar session is to talk about sort of budgets, financial forecasts, and financial modelling. Obviously, really key to, I would say, every business. If you're not doing it, you should be, for various reasons, which we'll talk about. So yeah, I'll try and get the slides up. So again, it's not going to be death by PowerPoint. I'm suggesting we spend sort of 15 minutes, just go through the slides, and then the rest, I want to hear your stories, your problems, what you struggle with, etc. So really want to sort of make the most of that really time. So I'll just share my screen. So budget, financial forecasts, and financial modelling then. So just a bit of background about me, I suppose. So I'm a qualified accountant. I've been my expertise lies within mergers and acquisitions. So I predominantly help SME businesses, more and more sort of tech startup businesses as well. My role really where I get involved with businesses and business owners centers around sort of valuations, forecasting, fundraising, and any sort of major transactions. So that could be, a management buyout, that could be helping to raise finance for early startup companies, etc. So, and what's really key to that often are the numbers. We can all sell the vision and the story of our business and how we're going to change the world. But, in my experience, if you don't have the financial model and numbers that back it up, that's where it tends to fall over in that space, generally speaking. So a few other bits there about what I do. I'm a trustee as well for Age UK, but nothing massively important there. So yeah, we're collaborating with Sheffield Digital, trying to help you guys, try and help business owners with their needs to help them grow, really. And yeah, I'm going to be asking sort of questions in the room about particularly centered around budgets, financial models, what people do out there in the space. So, why financial forecasts and models are important. Getting your pricing right. So if you're starting out as a business, you've obviously got to decide what sort of financial model you're going to put in place, what budgets you're going to set, how pricing is going to work, etc. What if scenarios as well. Really, this is probably the most important. Being flexible on your financial model. As businesses, get into their journey, they're going to have to pivot at certain points, and really being able to build a model where you can pivot easily and work out what that means from a financial point of view is really important. I think this is a key one for me, is confidence for debt and equity lenders. The numbers are really important. In my experience, if you can't back your idea, your vision up with strong sort of financial projections, it's part of the storytelling. It's so important to get that piece right, to either get the debt funding that you need to grow your business or get an equity partner on board to, again, help the business to grow. No one's going to be writing a large check if they don't believe the numbers. Ultimately, investors, they want to see a return on investment and they want to see that the numbers work. So for me, that's really where financial forecast and modelling becomes really important. So it touches on there, bringing the company vision into reality. And yeah, talking there about pivoting as well and needing to pivot and what's the impact going to be on cash flow, importantly, because I think I see a lot of businesses where they're highly profitable, but they're not very cash generative, and understanding the link between a P&L and a cash flow is so important. And the decision for founders, I often sort of say, is, look, you can try and understand it. I think it's important that you understand the financial numbers because you're the ones that are going to be talking to investors. It's okay having advisors like ourselves on board to help you, but ultimately you need to have that understanding piece because that's where you're going to get back in. So again, just a very simple, super simple illustration about, where founders might not sort of see the cash impact. Just talking about your sort of corporation tax, like, if you make a decent profit in year one, well, you've got a tax payment to pay, and if you start spending all that money and you're not mapping that out, you're going to have a problem 9 months down the line. So that's just one example of, you know, where a cash flow, where financial forecast becomes really important. So tools that we use, so again, these are probably, I would say, the better ones. Castaway is an Australian-based modeling company. They've switched now to cloud accounting. It used to be very similar to wind forecasting. For anybody that's into forecasting and modeling, they probably remember that. Very, very good for financial modeling. So good if you're pulling together a financial model for an investor piece as part of a pitch deck. I would say it pivots quite easily, it consolidates easy. So a really good tool for businesses where you're needing that sort of financial model piece. So a one-off forecast for a purpose, i.e. a fundraise or something else. I would say Castaway is really, really good. If you're wanting to use a forecast for, you know, keeping a forecast up to date, Fathom is a really good one. That links to tools like Xero, which again, some of you may use from your bookkeeping point of view. So it brings actuals from Xero in and sort of monitors the actuals to map out what the projection might be. So really good for, you know, a very simple way of looking at what your forecast position is going to be. Fathom is it's essentially an add-on to Xero that you can bolt on. Obviously, those two tools there's a cost to that, and it depends what sort of model you want to use as part of that. But they do vary. But I would say they're very good. I would say Fathom is better for SaaS-based businesses, so businesses where you're subscription-based. You don't have to worry about stock or work in progress. So again, depending on what type of business you are, if you're project-based, Fathom will help to a certain extent, but it really struggles on looking at WIP, work in progress, and any sort of accounting adjustments that are needed. Castaway's the one to go to. And then the default position is Excel. So probably, you know, we've seen a lot of sort of tools that have been created mainly by ex-accountants, bankers, people in finance, to try and pivot away from Excel. But that is the default position. Excel, because it's so flexible, the downside of tools and software sort of solutions is that when you start to pivot, they might not be able to handle the data that's going into it. So Excel is for me still the default position. You've got so much flexibility there. The main downside is obviously making sure that you know, your formulas are well sort of embedded in that, and error checking is absolutely paramount. But I'm sort of going to lead on to the impact of AI. There's a product out there which some of you may use already, some of you may know about. It's called Claude AI. This is going to massively change, and it is already massively changing the sort of market, really, from a forecasting point of view. What I would say is there is a free option for this, so I would definitely be downloading this. It's part of a Microsoft add-on as well, so it's really easy to start using and testing. And this is a bit of a game changer. So before, you had to, you know, have the expertise in either coding or really knowing your formulas to get a financial model to work in Excel, whereas now you don't need to. You know, you can literally ask Claude to build a financial model, build an assumptions page. This is my business, this is what it does, and within minutes it starts to churn out a profit and loss, a cash, a balance sheet. And then it's about, so the game's slightly changing, where it's more about what are the right prompts that are going to go in, a bit like, you know, ChatGPT. It's the equivalent for Excel. It's really, really powerful, and I would strongly be recommending, if you're into numbers and spreadsheets, this is going to be a bit of a game changer for you. Probably put advisors out of jobs, maybe a little bit. Shouldn't be saying it. You know, my role now is very much about checking and making sure those prompts are correct and that there's sufficient error checking in the modules. But you can really, you know, this is a bit of a game changer, and you need to take advantage of this. Like I say, it's a free add-on for now. You get so many questions that you can ask. We've got the strongest license here, and we use it, and that we're having to pay for a premium. But I'd definitely be recommending that you guys, if you're not using, or you don't have the time to build a financial model, this is a quick and easy way to start setting it up, because you can tailor it based on the situation. If you're getting an equity investor on board and they're saying, right, we need a 3-year cash flow model with X, Y, and Z, and covenants need to be X, you can start to input that and it starts to create it. I'd always say that you need to understand the numbers to make sure that it's correct, but the building side, the building of a financial model is going to be massively changed. So I've put it as a bit of a focus point on the slide, because I do think, what I wanted to come in here to do is to tell you what tools we think are powerful and we use. We still use this sort of software solutions, but this is going to be a bit of a game changer, I think. So definitely get on that if you're not already. Next slide, just talking about the risks, touched on it there. Whilst these tools, particularly Claude, is really powerful, you still need to sense check it. You still need to make sure that the models make sense. And speaking to somebody who knows what an investor wants to see, what the metrics need to be to get people invested in your business, is still really key. So just be careful about doing that. Founders, I often speak to founders, and the main problem is they're trying to do everything because they have to do everything. I think this tool helps you, but you still need to understand the numbers and understand, because often you're pitching something, or if you're pitching for investment, the numbers people in the room, yes, you might excite them with your product or your service, but if the numbers don't make sense, their confidence is just going to drop and they're going to move on to the next sort of business that they might be able to help and support. Again, we're not plugging anything. There is a bit of a guide that we've just done. Happy to share that with you. It just goes through some things that you should consider, some sensitivity analysis. It's quite comprehensive, so I can follow up after and share that with anyone that wants it. But yeah, I think that might be helpful content to read, a bit of bedtime reading for anyone that's interested in sort of why it's important and what tips and tricks you need to do along the way. So that was it in terms of questions. Feel free to fire it at me. I'll stop sharing my screen.